What's up, everybody? Welcome to the show. John Sbrocco here, and Craig Lack bringing you another one here Thursday night. Heads Up
Hey.
Advisor. What are we talking about tonight, Craig? Little,
Hey, man, our girl came up with an interesting topic, right? Hide and seek with insurance company profits. Now, it's really funny because, John, your specialty is converting fully insured to self insured, right? And so hopefully this will be kind of like watching, I don't know, an Alice in Wonderland, movie where I think it was the Mad Hatter. He says, well, sometimes I believed, what was it? Sometimes I believe 6 impossible things before breakfast. And so it reminded me of that because I think, after tonight's show, what you'll discover is maybe that what you believed is true about being fully insured, well, it just might not be true. And so there might be so much more money built into your premiums that you weren't aware of that could be better purposed in a partially self-funded arrangement.
yeah,
What do you think,
carrier
Don?
profits. There's money all over the place. Show sponsor Virtue Health. If you want to take your groups fully insured to self-funded, we got the solution for you. Long-term solution for a long-term strategy. Check us out, virtuealliance.com. Book a demo with us. Winter's coming, baby. Can't wait to start staying at because good old Clayton Young Gun last night. I think he said he booked like 4 or 5 meetings yesterday. He's like, winter's coming.
Ooh,
people want to talk.
good for
So
him.
get out there. Don't start taking a vacation because we're in June here, going in July. If you're trying to get after, if you got a book and you're trying to take vacation, okay. But things are going to start heating up. Inflation, it's got to be worrying people, right? It's got to be worrying. Will they stick it to us this year 1-1? I don't know. With so much inflation everywhere else, can they get away with it? Because it's what hide and seek is shit. We got to pretend like we're not making money because of the MLR, but we got 50,000 places to hide it. But do we keep pushing? Our profits are through the roof, better than ever.
Yeah,
it's going to be through the roof. Can we get away with it? Do we have to pull back and go? I shouldn't say let's not be greedy. Let's be less greedy than we normally have been in the past and keep everything on the books and just keep printing money going forward. Is that maybe the conversation they're having? Because we'll get into it. Where's the money hidden? And they're making money hand over fist. Do not believe the MLR that they follow that 15 cents on the dollar and paying you 5% of that. Not happen.
Yeah. 20 cents for the little guys, right? Yeah, 80 20. Yeah, it really boils down to, I mean, there's so much money in the fully insured marketplace. Just look at their results that they've all had, record profits, record compensation for the C-suite executives, et cetera, et cetera. And really what you're talking about, John, is, hey, do we make this change or don't we make this change? And what are the risks associated therewith? And you made a good point. The insurance companies have really, they've been at this stuff for 50, 60 years. So in some states, in some markets, I've talked to brokers and consultants who say, look, the employees at our clients or our clients believe that they have to have that Blue Cross Blue Shield network, or put that with any BUCA name you want. And if we don't have it, we can't go anywhere else. So they actually, in quite a number of states, they feel trapped because they don't want to hear any noise if there's network disruption, which is just fascinating that the definition of a viable alternative is whether or not the network matches up after all these years.
Yeah, I mean, there's so much overlap and what have you. I mean, is there a challenge with networks? Yeah, look, not for nothing. When you're trying to convert self-funding over, you got a lot of obstacles. And the network is an additional one. So you got to use the BUCA year 1. They're more comfortable with it. But transition year 2 is my opinion.
If God forbid they had no network, right? I mean, some of the brokers are out there doing no network options.
Yeah, John Clay, cowboy out there. He likes to be a cowboy. God bless him. Not my style. I don't have nothing to prove. Not to say he does, but I don't. So look, let's talk about it, Craig.
Yeah.
I think you brought up an interesting one. I'm in the stop loss industry, right? Not traditional stop loss, group purchasing. Check out our go to our website. You can watch the replay, but we'll be running that webinar on a monthly basis, first Tuesday every month, to educate you on the pitfalls of it. But let's look at that, right? So they're building in what? A pooling point, right? They're laying off
Yeah.
the stop loss insurance, whether they're
Put that
taking
in
full
English. What's a pooling point?
specific deductible. So just like on self-funding, you have a spec level, right? The fully insured has a pooling point there. That's what they like to call their spec level. They're laying the rest off. They're buying insurance, but
Whose premiums are they using to buy it?
yeah, they're using your premiums, and yet they own the risk. I mean, I own risk in my program. Anybody knows that's where most of the money is, and so the fully insured carriers know that, but they don't have to report those profits towards the MOR. So that's a place that a lot of money is made for the fully insured carriers, obviously. Oh, John Clay is joining us.
Hey,
Yippee-ki-yay.
let's get a little granular on that, John. So what you said is you have a fully insured premium. The carriers, in order to significantly mitigate their risk, use your money to buy reinsurance to protect their shock loss claims inside this pool of other employers that you're part of because you're fully insured. Is that right, John?
Correct. And they get the benefit, right?
How much do they make on the stop loss? Do they have commissions in that stop loss? Nobody knows.
Yeah, we have no idea what's hidden there. That's one layer, right?
Yeah.
So, hey, if you're watching live, let us know where you're watching in from, and let us know if you found some carrier profits or you got some places to share where others watching should be looking here. Let's save the easy one for last, but one that is a big one is shared savings, right? If they're tapping outside networks, that's you know what that's what they do maybe on the out of network, but that's more on the TPA side. You know what another one is the blue card, right? They upcharge you if you're using access in the blue card out of your state, right? You got New Jersey, Horizon, Blue Cross Blue Shield. You go to PA, you got 3 of them. Very weird state, but they're going to upcharge you on that claim, okay, to access that network.
Is that another way of saying there's spread pricing in those claims, John?
Yeah, there's there's spread pricing all over. If you look at, I mean, it's pharmacy side we can talk about, but that's the easy one to talk about. But there's, I think it was Cigna. If you go back and you pull the lawsuit up against Amheimster-Busch, one that I used all the time when I was selling against Cigna's level funded, which I love running into that product. They're already self-funded. Now I can just tell them how criminal they are. And I pull that up. I go, look what they're doing to the big guys. What do you think they're doing to you? So they're billing you, let's say, $100,000 and reimbursing the provider less. Maybe they're paying the hospital system $90,000. Maybe they're paying 70. Who the hell knows? Right? I forget what the number was, but it was an absurd amount of money that they assumed was stolen from them by changing. Now they're saying, hey, we get deep discounts, right? Here's our discount. But what they don't tell you is they're getting an even deeper discount or even better deal from the hospital system, but they're upcharging you. So that's another way that they do it.
Yeah.
Now they could bill that as an expense that the claim was X amount of money, but hey, they're making money on every claim. That could be hidden. Another big way to hide it. John says basic supply chain management. Anything not delivering value is considered waste and to be eliminated. Yes.
Careful, John. That you just eliminated a whole lot of brokers.
That's if you're doing RVP, that can be done very well. If you're using a network that's a lot of restrictions around it, they're not going to let you use an independent TPA. Use the big green trees logo.
Hey, there's another source. There's another source of money. How about the excessive administrative loads if you want to carve out the PBM? Is that the silliest thing you've ever heard of, John? I mean, it's dramatic how much they want to charge you if you want to unbundle their packaged product.
Yes. To me, it all makes sense, though, because the reality is they're just trying to keep you from doing it. And you just got to push back. I mean, we had a group, 1,000 Life group here in Vegas. Me and Paul went to go see Paul Carroll, and we saved. I think our illustration showed 1.7 million in specialty loan savings. Conservatively, they took that back to Blue Cross, where Blue Cross was like, "Oh, you want to move the PBM? We're going to charge you this." They ended up net with the upcharge, without the upcharge, just going back to where they were the year before. They say they came down and credited them $500,000 against the admin to keep the PBM in place. Amazing. And of
Yeah.
course, the dope that we met with, who doesn't have any P&L responsibility, took it because he went back and said, "Look what I did."
That was
Right
the
now,
easy decision. Yeah.
Paul got a fee. I think he got 25 grand. And so, hey, he didn't work for free. We don't get him now. We'll get him later, but at least you didn't work for free.
So that's just another symptom of what happens with a lot of these fully insured pool products. You have extremely limited plan design features. So they restrict you, right? You can't, oh, DPC? No chance. No, we're not doing that. Well, if we have it, you can use ours, but you can't use yours. And so they just have a whole myriad of limitations to restrict your plan design, because they said they'd like to tell you, well, that, our plans all have to be approved by the state, and it's not approved. And so they create these walls, these hurdles, so that they don't have to be flexible, or at least that's what they try to convince you.
Yeah, I mean, it all makes sense. This is, what would you do if you're them? You would do the exact same thing. We got nobody that wants to chime in today online. We got people on LinkedIn, Facebook, YouTube. Go ahead and chime in. Let us know where you're finding hidden profit margins. TPAs. We do a lot of business with many different TPAs. There's some great TPAs out there. There's a lot of bad TPAs out there. Now, in fairness to them, right, we have a preferred one that has taken the route of being upfront, transparent pricing. Here's our high admin fee, which is considered high if you compare it to Buca's and others, but we're not taking any money anywhere else. And then you have TPAs.
Yeah.
And look, you have other TPAs that have to compete on the spreadsheet with the big box guys against Blue Cross and what have you, and Meritain and Humor, all those guys. And so they have to make money elsewhere because they can't make $25 PPM. They lose. They can't run a business on that dollar amount. I think it's got to be 40 plus. Craig, what did you say average TPA makes a year?
About $6 PEPM net profit.
Crazy. Okay. So they got to pick it up somewhere else. And where you see it is basically where the Bucas do it too, is in the shared savings programs. When they reprice out of network claims, they take a piece of that. And then, yeah.
John, what kind of information do the carriers give you on their auto escalation clauses built into their chargemaster contracts with all the providers? Anything? How about the auto adjudication of 80+% of the claims are auto adjudicated? There's no audit availability. It's forbidden. And if you can get it, it's probably going to be on a mid to large size group, and it'll take months to get that approved. And then of course they won't give you money back. They might give you a credit, but those are just all examples. And of course, now we have the new laws. And I think today there was a story about the first hospital to have a judgment against them for lack of transparency. Opaque pricing is going to remain the rule rather than whatever they've tried to regulate the industry with. So you have this entire system, and we just keep pointing out one feature after another that causes your costs to go up when you're fully insured, and creates, there's a lack of transparency. You think there's a lack of transparency on the pricing of an appendectomy at a hospital. That's just a symptom of a much, much larger program design challenge that exists in the industry that employers have just accepted and brokers have accepted as, this is my reality. And so I don't question it. And, think about, what about, hey, John, you ever seen a renewal exhibit? I mean, smaller groups don't even get a renewal exhibit, right? You just get a nice letter that says, hey, we did this. We're going to give you an 11.3% pool increase. There's no renewal exhibit. Sometimes when there is a renewal exhibit where you get to see what their renewal formula is, you find errors in it. they're assuming trend on pharmacy and medical claims that are extraordinary. They don't they don't take out the spec claims, the pooling point that you talked about. They don't calculate that correctly because they know that the employer buyer looking at it has no idea what they're looking at. And many times other people who look at it don't understand how subjective a renewal exhibit can be.
Oh man, they can make up so much stuff and lies. We got somebody here says shared audited claim subrogation. Let me find my mistake and keep percentage of it. It's the most comical thing there is if we make an error and we recover the money, we get a third of it.
Who's we?
The TPA, the carrier, whoever.
Okay,
right?
so you're paying a fully insured premium. They auto adjudicate 8 out of 10 claims, and when they discover that they made a mistake, they get
or somebody catches them making a mistake.
They get a piece of the shared savings from their own error. Is that what I'm understanding?
Yeah, I want a piece of the action here, baby. Yes, we can pull money from everywhere. And look, that's the reason. Brokers ask me, and it's frustrating. Is John? I'm going to try and take self-funded, but you're here on max cost. You're 10%. You're 15% over. Fully insured here. Well, look, you've got multiple parties in there, right? And so we have to efficiently build in the number of claims. But each party, stop loss, whoever wants to make a profit. When you're one entity, you can really squeeze the hell out of it down because you make money on every single avenue. You make it on ways that, okay, let's go to pharmacy for a second. Well, if I'm getting a drug that's $100,000 drug, okay, my rebate, let's say the carrier's making 20 grand on it. Well, if you hit a certain number of volume, there's accelerator bonuses, right? If you sell a certain amount of them, guess what? Instead of it being 20, we'll give you 30. We'll give you 40,000. So what's the goal? Let's get more members in our program, okay? So I can squeeze down the max cost, be more competitive, write more business, and make it up on the rebates itself, which it doesn't change the claim, right? I don't have to build in an extra claim. I get more piece of the pie of that claim. And so there's just so many ways they can do it and get creative and manipulate the system. So again, we're just giving you talking points to have conversations with prospects, clients, let them know. Sometimes you got to let them know how smart you are when you're up backs against the wall and you got some challenges here, but it's all over the place. You've got to create pain. You've got to get them pissed off to make a change. I see this mistake by a lot of guys that we talk to. It's like, well, what was the pain? I don't know. Or did they get angry in the meeting? How do they feel? They like Blue Cross. They want to leave them. Well, that means you didn't sell against Blue Cross hard enough. Did you show them what Blue Cross is doing to them? Did you show them the admin agreement? I mean, read the admin agreement. Get a copy of it. Redline it or highlight it and show them. This is what your agreement looks like. Or another trick we did was we took plan A, plan B on a presentation and we wrote out the contract terms in plan A, and then we wrote ours out. Mr. Employer, which one would you like? Would you ever sign up for something like this? No, of course you wouldn't sign up for something you can't audit. They take a third of the savings. They do this, they do that. Well, guess what? This is actually your contract, right? You do it in a nice way, silly, funny way. But this is how you have to get them pissed off in the meeting and sell the story of this is just a logo on the card. And now they're taking advantage of you because you trust this logo. Okay. What do you say, Craig?
I say that what you call pissed off, I would just call, you need to create doubt and uncertainty because they're pretty sure they've been buying this stuff, the last 5, 10, 15, 20 years, whatever their experience level is. And they think that this is the only reality that there is. And the fact is that if you sit down and you let them know about all of these opportunities for them to be ripped off, I mean, there's a reason why they have a $16 admin fee illustrated, because that's not the source of their revenue. That's like the loss leader, because there's all these other ways. I mean, we've only scratched the surface. There's many more ways and areas where they can hide margin. I mean, we haven't talked about IBNR. We haven't talked about interest crediting rates. We haven't, there's just a lot of different areas that buyers, they're not aware of it. Many brokers are not aware of it. And so It really is a function of, you know, everything is not the way you think it is. The odds are pretty good that what you think the way it works is not at all the way it actually works. And that's okay, but you just have to go in with open eyes and have kind of a fresh set of eyes tell you what the math really looks like and why what you perceive as risk is in fact the only possible way, more often than not, for you to have a chance at winning, because the fully insured blueprint that's been in force for 40 years is designed to do one thing: transfer all the risk to you, the employer. You take all the risk, not the insurance company. And I think that's a shock for most people to hear.
John Clay says, had one exhibit show employee deductibles as savings. That's a funny one too. Yes, I've seen that before. It's comical, right? It is comical.
Is that why half of Americans are on high deductible plans now? Everybody's buying that story?
One user says employers can't even get enough information to ask the right questions. And most brokers don't know how or what to ask either. Yeah, I mean, this is the beautiful thing about our industry, guys. When I started, this is why I started in self-funding, is nobody knows. The industry was built the way it was built, and it was insurance peddlers, you can call it, and insurance shoppers every year. And that, look, guys made a lot of money, built their business.
Depending on your state, that may be your reality.
Yeah, times have changed. What does John Clay says? Always love rate stabilization reserves and renewal projections. Yeah, catastrophic claims.
Yeah, so rate stabilization reserves. Yeah, what kind of interest rate are you crediting my client who's giving you their money? Oh, nothing? But you earn interest on the reserves, that billions of dollars that you have in reserves. You earn it, but you don't pay it to your policyholders. It's their money. Wow. Yeah, and did you see the IBNR report? Do you know if it was calculated right? Of course not.
What does IBNR stand for?
Incurred but not reported.
No, what do you call it? Incurred but not really.
Yeah. Well, it's a possibility.
That is for sure.
Yeah.
What else we got? You want to cover pharmacy?
Oh man, knock it out of the park. I mean, look, guys, any of you who've done self-funding realize there's many different ways, and it's called many different things. And as soon as you try to grab one, they just call it something else, and they move. It's the 3-card money on the streets of New York, right? You go to New York and you're trying to find the P, right? And that's exactly what PBMs do, and they are the best, smartest, brightest people. It's why they, can buy all of the bukas, so they can obfuscate what they do behind the health insurance plan now. And so we're in a very dangerous position where the supply chain controls the demand as well. We've combined insurance companies with PBMs. That's, really a bad idea for consumers. So prescriptions, of course, there is money everywhere. And so, John, you can speak to that really well.
Yeah, I mean, it's comical how much money they make. User says that's why they don't care about refund checks. They get to be the bank. Sorry, Stella is whining. No, Stella, we're not playing right now. We're at the new office here in Vegas. Got a nice new suite office. Expansions in the works. Summerlin, Nevada here. Yeah, PBM guys, 35 something buckets of revenue where they can hide manufacturer revenue. They know the trick. That employers know what rebates are. So they're going to give you something if you ask for it. Yeah, we'll give you the rebates. Okay? But that's not all the revenue.
Yeah.
Right? There's so many different things. I mean, I think the contract's 100. Some of them are 120 pages long.
Okay, wait. I just want to have people have a shred of common sense, because it's not nearly as common as it used to be. How can you tell me that a transparent contract requires a 120-page agreement?
Not transparent. Those are the big three. The transparent ones are usually like 8 pages, some of them, very simple.
I'd call those probably the fiduciary level. I mean, remember a few years ago, we spent a few days in Vegas learning about all the different ways that PBMs can hide money.
Oh, there's plenty. And look, I mean, there's a lot of TPAs out there. You want to know how you run from a TPA? If your TPA sends you an email and says, because I see them, I see them all the time because I'm in the wholesale side. They say, look, here's your increase. It's 12%, but we can get it down to 8% if you change the CVS Caremark as the PBM. You know, I wonder why, because they're nice guys. No, wait, I know why. They get better pricing. They get better pricing. They get better pricing, so they're going to credit our admin fees down. Yeah, it's kind of comical. Yeah, no plan sponsor can ever tell me what they actually get for rebates per drug. Yeah, I mean, you can either chase higher rebates, lower pricing and higher rebates, or you can try to manage the spend. You pick, right? Don't manage the spend. Find the lowest price of the drugs and chase higher rebates, or you can start to manage the spend and, hey, get it for free. Yes, there's programs out there where those drugs are given away for free. But yeah, that's all I want to cover on pharmacy. How much more we want to talk about there, Craig?
Yeah.
What else you got?
No, man. I mean, I think that's it. I mean, we get 30 minutes of where's Waldo? Waldo being where's your money? Why are fully insured employers taking all the risk? How come nobody explains that blueprint to them?
And look, you've got to get yourself in a position to win. The only way to do that is to be self-insured. And I'm not talking about every group. Guys and girls, there are groups that the PPY per employee per year cost is so low, you cannot take them self-funded. Okay? Traditional self-funded, the right way. You can level fund. You can do the carrier models, right? Because again, they control everything, so their rate plays. Don't always assume money's going to come back. Just go for the low. It's always like a fully insured product. Fine, traditional self-funding, but again, don't think year one you're gonna save all this money. It's a long-term strategy. Okay, it's like investing.
Please explain to the less experienced people out there listening why year one, 9 times out of 10, always looks good.
Well, year one can look good depending on what type of contract, because not all the claims have
it's
come
usually
in.
immature, right?
Yeah, if you're running a 12-12. Now, again, you're trying to take them on a longer term strategy, okay? And so employees also need to learn the program. You've also got to make adjustments throughout the year. And so it takes more time. Can you get lucky? Of course you get lucky. I've had plenty of groups that have run absurd. We have a 90 life group in the program for Virtue Health right now, and they save $500,000 year one. Now, they went from fully insured to RBP. They're projected $3.2 million over 5 years. It's insane. Not all of them are that sexy. If you have one sexy, make sure you're screaming about it at all your cases or your prospects.
Yeah.
But again, the reality is you've got to clip every year and try to save money, but it is a long-term strategy. Stop thinking short-term and sell a two-year contract, a 2-year strategy if you have to out the gate. Don't try to sell it on a 1-year play, because they're going to come in next year and go, what are we doing this year? And they're back in the mindset of shop and drop. No, we're sticking with this. This is what a bad year will look like next year. Here's what a good year will look like. And if you have the right partner on the reinsurance side, you can control that to an extent. Okay. You can cap that. So, yes, somebody says 9 months of claims. Yes, 9 months of claims. People don't understand that. People get up.
I love the poor kids that are posting on LinkedIn. It's like, oh, we just switched the group and we're 6 months in. They've already saved. It's like, oh, please, come on, guys. We need to protect clients from people like that.
Yes, people on stage. We saved in 6 months with DPC. We saved X amount. You haven't had any claims come in yet. Good luck. Guys, we're here to help. Let us know if we can help you. Check us out, virtuealliance.com. Tune in every Thursday, 8 p.m. Eastern, 5 p.m. Pacific. If you're listening on the podcast, check us out live every week. Guys, thanks for joining us. Craig, any final thoughts?
No, man. Hey, if you want to shorten your learning curve, talk to John.
Be good, guys and gals. Talk soon. Be on the lookout for Virtue Health's next boot camp. See if you qualify. Reach out to us. We will see you next week.
Where's the boot camp going to be, brother?
Don't know. Probably, maybe California. I don't know. California or Florida. Be good.